And number 6 deals with a partnership. Here are the fact patterns. I'm a small partnership had the following information. Income from business operations, $800,000. Business meals, $1,500. Depreciation expense, $30,000. Guaranteed payments to partners, $85,000. Rent expense, $12,000. Charity, $48,000. Long-term capital gains, $2,000. Short-term capital gains, $5,000. And then we have fines and penalties, $1,800. So there's a two-part answer for this question. We have to figure out the ordinary business income, also known as the non-separately stated income, and then we have to figure out the separately stated income. So let's do the non-separately stated income first. We got ordinary business income. Again, remember when we're dealing with partnerships, when we're dealing with S corporation, there's a couple of steps to it. First step, we have to compute the non-separately stated income known as the ordinary business income. That's step number 1. Step number 2, we have to identify the separately stated item. Step number 3, we allocate separately stated item and non-separately stated items on K1s to the shareholders. So we do the same thing for the corporations, S corporations, we do the same thing for partnerships. So let's do the ordinary business income first. So we got business income of how much? 800,000, right? And then we have a whole bunch of expenses. Business expenses. I'm going to abbreviate business expenses. Let's start out with business meals. How much can we deduct for meals? Half of it, 750. So we're deducting 750. Depreciation, regular depreciation, it's ordinary business deduction. If it's section 179, that would be separately stated. So depreciation is 30,000. We have guaranteed payment. Guaranteed payments, 85,000. And rent, we have 12,000. Do we have any other non-separately stated items? That's it. So the net ordinary income, if my math is correct, I got 672,250. So that's number 1. Again, that's your step number 1, non-separately stated income, or non-separately stated items. Step number 2, now we have to list the separately stated items. So what do we have for separately stated items? Anything from here? There's one item that's separately stated. Let's assume that each...
Guaranteed payments.
Yeah, the guaranteed payments. Guaranteed payments would be a separately stated items. Let's assume that they split the 85,000 50-50. Each partner would report 50% of the guaranteed payment on their respective tax returns. What else?
Non-deductible items.
Well, before that, let's do charity. Charity, that is 48,000. Again, long-term capital gains, which is 2,000. Short-term capital gains or capital losses, right? 5,000. Now, somebody already said this answer, non-deductible expenses. There's actually 2, right?
Yep, meals and...
Yeah, half of the meals and entertainment. And then we also have non-deductible fines and penalties of 1,800. Non-deductible expenses would be 2,550, right? If my math is correct.
Yeah.
So again, that's separately stated items and non-separately stated items.